a $20 million letter of intent in one day with a property that we have available. It's a little bit over $20 million property that we have listed for sale. We got a letter of intent for $20 million in a matter of hours. With the way that technology is right now, speed commoditizes most everything. Okay, speed commoditizes most everything. I'm going to write this word down because it's so important, because this is what slows people down in terms of this wealth right here, in terms of wealth, is commoditizing, or what I would call commoditization. All right, so what does speed do in terms of commoditizing your wealth and making you go slower to getting to where you need to get to? Let me give you a couple of analogies if you're kind of confused with what I'm talking about, because once I share these with you, you'll get it just like that. So you go back 20, 25 years, heck, even 30 years. I'm a real estate broker, real estate agent. I'm out there selling apartment communities, selling apartment properties. I'm matching buyers and sellers together, selling apartment properties. Okay, how did I do business back then? Well, here's pretty much how it would happen. An investor would have an interest in buying an apartment property. We would draft a purchase agreement on paper, multi-copied paper with what was called carbon paper. So you'd have these offers with 4 or 5 different carbon copies behind it, and you'd write the offer using a pen. You'd write the offer out. Okay, you'd make phone calls to people. Yeah, I've got the offer done. I need to deliver it to you in person. When can we meet? Well, I'll be home tonight at 6. So I'd have the offer done. I'd meet with the buyer. They would sign it at their house or their office. Then I'd go to the sellers and then present it to them in person, have them review it in person. They would sign everything in person, and then I would take it, make a few more phone calls. You see where I'm going, right? Everything back then was not really commoditized. And even if they were, let's say, they weren't local investors, let's say they're out of state, there used to be something called a fax machine. I don't know if you remember what that was, and some of you might not even know what I'm saying when I'm saying fax machine. I would do all the same things, but instead of sending something through email, a fax machine is you feed the purchase agreement or the paperwork in a machine. It goes through the phone lines and it feeds it and prints it out on another printer, another machine somewhere else. Okay. Now, back then, that really wasn't a commoditized kind of business, was it? You really needed to have your fingers in everything as a real estate agent, real estate broker selling apartments back then. Okay, so let's fast forward to today. Is this the case today if I'm a real estate agent, real estate broker selling apartments? No, it's not. How are most documents, most information, most purchase agreements do you think handled? Electronically, right? So we've gone from, I'll say, hand to hand, hand to hand, fingers and everything. I'm always in the middle of stuff, getting things done, communicating, phones, faxes, okay? And typical real estate commission was probably around 7%, okay? Now you fast forward to today with the speed of technology. Most everything's done online, DocuSign, e-sign, a couple of phone calls, a couple of emails, and now everything is done electronically, and now fees are probably anywhere from 3 to 5%. Okay, they've gone down dramatically. Why? Because of speed. Speed commoditizes this. Here's another quick example. Okay, we just got a letter of intent in our brokerage side, a $20 million letter of intent that was generated in one day through 9 or 10 emails. In one day, with a property that we have available, it's a little bit over $20 million property that we have listed for sale, we got a letter of intent for $20 million in a matter of hours. If you go back to the 25, 30 years ago, Darren, we'd have to do unbelievable printing and pitch decks and mailings and campaigns, and we're throwing, pretty soon we got to go to the printer and have 100 of this taken. You see where I'm going? We had to do all of that work, and then maybe after 6 months, we might get a $20 million letter of intent after, oh man, well, we worked for 6 months to get it. Now we get it in 6 hours. Why? Because of speed. Technology is commoditizing the real estate agent brokerage business. Okay, now I give you that analogy and I go through all of that because that's the way it is with most things now. Most things are fast-paced commodities that are either commoditized now or they're on their way to be commoditized. So let me ask you like a quick question. With the way that everything is going right now from the commodity standpoint that I just mentioned to you, would you want to own a real estate company that sells real estate and that's all they do? Would you want to own and invest a lot of money in a real estate company that's continuing to act as agent and broker in selling real estate, knowing what you know now with what I just mentioned to you? Would that be a super unbelievable top 2 or 3 investment that you would make? Well, the answer is you either have 2 answers. One is probably not, with what I just mentioned to you and the speed of things being commoditized in that example. Or if you do you think you would buy it for the same price that you would pay for it 30 years ago? No, you'd spend a lot less on it, wouldn't you? Okay, and so that's the thing. That's the thing with wealth. That's the thing. Wealth has got to be something that you have that stays out of the commodity bucket. It stays out of the commodity bucket. So you have to have at least some portion of your time, effort, energy, and money devoted to something that cannot be commoditized. You can't commoditize it. Okay, it's not like buying tires. What kind of tires do I get? Do I get the radial? Do I get the GT radial? Well, okay, well, how much is it? Okay, I'll take the one in the middle, and that's what. You see what I mean? Okay, you can't invest your time, effort, energy, and money substantially in the world of commodity in order to build wealth. So what do we do here, guys? How do we combat this? It's actually pretty easy. It's pretty easy. It's a little more difficult to implement, but it's really not that hard. You need to be focusing on areas that have no commodity. All right? And an area that you want to be thinking about is the area of what's called hard assets. Hard assets. What are hard assets? Hard assets are simply things that cannot be commoditized. Things that, even though technology is going so fast, it's hard to keep up by the day, that a lot of businesses that were just cranking and just kicking ass today, boom, they're gone by tomorrow because of being commoditized. You want to be focusing, as I've mentioned, your time, effort, energy, as much capital as you can in things that are not commodities. And one of those main things are hard assets. So what are hard assets? Let's go ahead and let's just list a few hard assets out there. Are apartment communities. You cannot commoditize apartment communities. Another one would be like farmland. Okay, farmland. There's another hard asset. Another hard asset which has really been real popular, at least recently, in terms of price fluctuations as I'm recording this in early 2026, is gold and silver, right? Gold and silver. Hard asset, okay? Cannot be commoditized. And you can see like maybe Bitcoin, right? Bitcoin, and there's others too. There's others as well. So as everything out there continues to be more and more commoditized, the commodity bucket continues to grow and grow and grow. And so what you're going to find are, number one, massive layoffs at companies. Why? Because positions are being commoditized. Technology and the speed of technology is speeding up the commoditization of a lot of positions. So companies will continue to have massive layoffs, number one. Number two, it's a lot harder for college graduates that are not in the trades right now. The trades are things like maintenance, repair, welding, construction, those kinds of things. If they're more in a technology area or focused on businesses that are becoming more and more commoditized and positions that are becoming more and more commoditized because of the speed of technology and AI, they're going to have problems. They're going to have problems, right? And that comes down to being in the commodity bucket that continues to grow and expand. How do you get out of that commodity bucket with your value being reduced by the day, your investments being reduced by the day? You focus on and you get involved in hard assets and spend more and more of your time, effort, energy on hard assets. So another reason why I love apartment communities is because I fast forward in my mind. Do it with me right now. Let's fast forward 5 years from now. Are apartment communities going to be around in the demand? Probably. 10 years from now, are they going to be maybe even more in demand? I think possibly. 15 years, 20, you see what I mean? I know, okay, almost beyond a shadow of a doubt, because you never are 100% sure, but I'm 99.99% sure apartment communities are going to be around for a long time and not be commoditized. So what happens when that's the case? What grows? What builds? What expands? Simply this, back to this word, guys, wealth. Wealth. And by the way, it doesn't have to be apartment community. There's farmland. There's other things too, right? That are hard assets. Now, I'm not like a financial planner. I'm not a financial wizard guru kind of guy at all. I have no formal training or schooling in it, right? So I can't tell you, well, here's what percentage you should allocate here and what percentage you should allocate there based on your age and in retirement. I can't tell you all of that. I have no idea. We're all different. We all have different goals. We all have different targets that we want to hit. But what I can tell you is the more time, effort, and energy you spend with at least a fair amount of your net worth, not only money, but time and energy, like I've said, on hard assets, the wealthier you will be, and the speed that wealth continues to grow and expand will pick up and get faster. Will get faster. Okay? And it's all about, again, avoiding being commoditized. Not just you personally, not just your career, not just your future. I mean, you better be thinking about my future. Am I going to be commoditized with what I'm doing? How am I doing it? Are computers going to be doing what I'm doing in 5 or 10 years possibly? Could robots, could all of that happen with what I'm doing 5 or 10 years down the road based on what's going on out there and being realistic with that? Again, do I think apartment communities are going to be commoditized? No. But a lot of other investments, a lot of other things, careers, etc., that people consider an investment, they're going to be gone. They're going to be gone. So focusing a fair amount of time, effort, and energy on hard assets, maybe one of these is a place you want to go to continue to build and grow and compound wealth, guys. Okay, well. So over, the last 30, 40 years, this is what I've come to know, because even though there's so many things going on out there with the speed of commoditization, I mean, it was like this too 30, 40 years ago. And obviously back then the pace was slower than it is now to get to that and expand that commoditization bucket. But guys, the concept is still true today as it was 40, 50 years ago. Hard assets, as you're being commoditized, get out of that commodity bucket, get more into the hard asset bucket, and your wealth will continue to grow, expand, and compound faster and better for you, no matter what's going on out there with the speed of technology and the speed of commoditization. All right, look, I hope what I've shared with you provided you some value in terms of at least something to think about. That's number one. Number two, clarity. You know, there's a lot of noise out there. What should I do? How should I do it? What formula should I follow? What should I read? What should I listen to? What should I watch? I think I gave you a pretty easy roadmap in terms of at least your thinking and what to be thinking into the future. And hopefully I've simplified some things for you based on my 34 years experience out there. And then lastly, again, would love to hear your comments on what I've covered here. I'd love to hear your comments on my experience. And if you like what I've covered on this episode, click that subscribe button. There is more to come. All right, guys, thanks for joining me on this episode of the Heartland Multifamily Show, the place for all things multifamily and all things hard assets and all things no commodity allowed. All right, we'll see you later. Take care. All right, bye-bye. If you want to get your hands on more great multifamily real estate content, make sure you click here. If you want to invest passively in great multifamily real estate,